Tom Albanese, CEO at Vedanta Group. He joins us on the sidelines of the Axis India 2020 Stars Conference, which is currently underway. Tom, great to chat with you. Thanks so much for taking time out and speaking with us today at ET Now.
Great to be here again today. I look forward to this.
Okay, great. I can't say the same, Tom, about what commodities are into right now. They're in a major trouble spot, and it doesn't seem like there's going to be any revival anytime soon. And your company, Vedanta, unfortunately, is exposed to all of them. What is your own outlook on where this commodity downtrend is going to, hurt you, and how you, or rather, when are you expecting a turnaround, if at all?
Well, yes, certainly we've been seeing continued weakness in both oil and gas and the metal space, and there's still a lot of uncertainty about what's happening in China. From our perspective, China's still in a slowdown mode. It's still in what we would refer to as a soft landing, and as long as there's uncertainty about the pathway for China, that's creating, basically an uncertain sentiment that has been quite negative on the sector. I think, for us, what we have to see is a continuation of the macro drivers that we're seeing in this price environment for both oil and gas and for metals, that demand is basically being induced back upwards, and you see all the companies, including ourselves, significantly reducing capital costs, which will have a slowdown effect on supply going forward. And ultimately, Economics 101 will work, and we'll see a rebalancing of supply and demand. For our purposes right now, this is about managing through a trough, really focusing on what we can manage, which is our production, our operating costs, make sure all our businesses are safely performing as they should. And I was really encouraged by our operating results in the first half. We had a strong cost improvement focus. We had a real focus on increasing our cash flow after capital. As a matter of fact, our cash flow levels after capital were some of the highest we've ever had, even in these depressed market conditions. And I think we're even positioned to do even better on the cost side as we move into the second half. Certainly, as I'm meeting with the markets here in Mumbai, I was in Delhi yesterday, and in Europe and in North America in the prior 2 weeks, we're seeing more and more generalists are beginning to be nosing around the sector, beginning to test the sector, saying that there needs to be a point at which there is a bottom. Where is the entry point? What is the timing, and where are we? And I think Vedanta is actually well positioned for those generalist investors that are looking to get into the commodity space when it's in a trough. And I think we're very well positioned in great assets, and I think the team has been doing a great job in managing in a very, very difficult set of circumstances.
Tom, my next question to you is that how much of the current sell-off in commodities is a function of demand destruction, and how much of sell-off in commodity is a pure function of speculative unwinding?
Look, I think it's probably a combination of both the structural forces of a slowdown in the demand. Certainly we've seen the global steel sector weakening quite a bit as you've seen construction tailing off, as you've seen just investment sentiment being down but not out. And also, I think you have a lot of inventories that have been moving in the market. I think companies, as they're delevering, are probably putting working capital in the market, and that's had some speculative effect on certain sending prices down. So it's probably a combination of the two. This is something where the course of it's not completed. You've seen oil stocks, seaborne oil stocks have been rising, as a matter of fact. So I think that we have to be ready to weather these conditions for some time. Certainly that we're positioning our business to do just that, focusing on the cash flow. But again, sometimes when these things turn, they can turn quite quickly.
Before I move into specific questions for Vedanta and for the group, I have another very basic question. And I've studied last 50 years of commodity cycle, and the pattern is 10 years of bull market followed by 15 years of bear market. So the bull market in commodities, which lasted between 2000 to 2010, is unfortunately over. Now do you think we could be in a prolonged bear market?
No, actually, I don't think so, because in my own personal perspective, you can see from all this gray hay here, I've been in the commodity sector for 35 years. And I saw during the 80s a period of time when oil companies, for example, they were heavily investing in copper, and new copper mines were developed, and that sent the markets for copper down for a good part of the 1990s. And then they did create some resurgency. Same thing with oil. So it's been case by case. I think over the past 10 years, you've had an extraordinary boom in China, something that we haven't seen in the past 50 years, where an economy the size of America's or Europe's, instead of taking 50 years to develop, it developed in 10 years. So it had an enormous strain on the supply chain for commodities. The supply chain did respond for that, but now as China slows down, it now needs to absorb that extra supply that's put on the market. So we've been effectively in this downturn for a good part of 4 years now. But again, as I said before, you see in some sectors, like in copper, you see it in zinc, and you see it probably in oil, that in a couple years of continued slowdown of new supply coming in, there's going to be some compression in those markets, and they're going to turn. And again, as long as people continue to buy automobiles, they continue to want to live in better buildings, the emerging markets, we're seeing this in India, we're seeing people are increasing their consumption of energy in metals, that you will see that demand becoming resurgent, and you'll see those markets beginning to tighten.
Minus China, which are the pockets you are optimistic about, and large pockets which you're optimistic where demand or the commodity demand could really surprise us?
Yeah, I think you're looking as much on the supply side. And again, in supply, first of all, while zinc markets are quite weak right now, we have just in the process of closing our Irish operations this month, because they've naturally run out of reserves. One of the largest zinc mines in the world, Century in Australia, had closed in September because, again, it naturally ran out of reserves. And two of the our major competitors have announced that they were going to curtail some of their own production because of these low prices. So I would anticipate over the coming months, you'll see about 5 to 10% of primary supply of zinc coming off the market, and that's got to have a positive effect on the sector.
Tom, we've identified the problem. Now let's try and figure out the solutions. Given the fact that, both commodities as well as your financial situation at Vedanta is not very strong right now, and we understand that you're undergoing restructuring, plus some job slashes as well are happening. Before anything else, what was the rationale behind the 350% interim dividend payout this quarter?
Yeah, look, I think first of all, we had strong operating performance. Our zinc business did particularly well, which led to an increase in the dividend. So again, that allowed the board of Vedanta Limited to look to increase its dividend to its shareholders. Certainly, some of that dividend went to Vedanta PLC, the UK-based company, but other shareholders of Vedanta Limited got the benefits of that. And so I want to just, in terms of how to solve the problem is simple. It is about reducing our costs, maximizing our cash from operations. If we can provide dividends, great, we can provide dividends. Preserve the options for the future and look to growth. And I think that is something we're doing and we're going to continue to do. And I was pleased to see that the Indian government is doing the same thing. So in my comments today, we saw some papers from the Petroleum Ministry talking about upcoming auctions and moving to a revenue sharing type system, which is, for a long-term perspective, we are supportive of that. We're supportive of the Indian government looking to the future, anticipating it's going to need more oil, it's going to need more metals, and setting the policy reforms in place to do just that.
So what else is on the cards right now? Because we understand that you're looking at major deleveraging exercise as well. As a strategy at Vedanta, how are you looking to balance this commodity downturn and manage your business on the other end?
Well, again, I think we have, in all of our businesses, looked very careful at our capital spending. We're looking very careful how the businesses can work more closely together to create synergies, both in terms of costs, reductions, improving the supply chain, looking at the products we produce. Can we produce more value-added product? Do we need to produce just commodity-based ingots, or can we produce alloys, which the Indian market requires? Are we thinking ahead? Can we think about exploration? Where is the next generation of ore deposit going to be found? Is it going to be in India? Is it going to be in Africa? Some other part of the world? Where will we be sitting in that? As we generate our positive cash flows, how can we use that to de-lever, to put cash on the balance sheet, to bring down the debt, and then for the total balance sheet, look at where where we have extensions of maturities, we can put them in place. And we've been, I think, quite successful at doing that over the next 6 months. We intend to continue to that over the following 6 months. It's very important for us to be engaging with governments to provide the input. From my own perspective, I've been in the resources sector for a long time. I've seen it from a leadership perspective, and there's a lot that we can add in terms of the Indian government's thinking of how does it want to encourage the next generation of Vedanta? How does it want to encourage the Rio Tintos, the Shells, the BP to be investing in India to provide that next generation of resources for India? So thinking ahead, managing the present, making sure we're generating the cash flow in the present, but thinking ahead, thinking about those options for the future, thinking about where we can capitalize on growth opportunities, and certainly work with the Indian government as it needs to generate more resources for its future economy. How can we be part of it?
Tom, if I look at the holding structure of the Vedanta Group, earlier it was very complex. Too many listed companies, global and local. You've made the structure very easy of late, and after the mega merger, hardly any companies would be listed. But what's the plan in place to align the structure more?
Well, I think, given the fact that post the Sesa-Sterlite merger of 3 years ago, the structure has become quite a bit less complicated. And certainly, as I've been chief executive, been talking about the need to simplify even further, we're continuing down that path. Now, these things don't happen overnight because, again, you have to do them in a way which meets the needs of all the shareholders. It is something that is a progressive process. It's a journey, and I see us on that journey, and I see us continuing to engage. That's why we're meeting with investors at this conference here today, for example, talking about what are the individual steps that we would be doing, and certainly the merger that's been announced by the boards of Kane India and Vedanta Limited, still subject, of course, to the approval of minority shareholders, would be a part of that journey.
Indeed, Tom, you have spoken about the steps that you're undertaking, a lot of restructuring towards improving the business, but I wanted to talk about something positive as well amidst all the bleakness that we've been discussing, the resumption of the iron ore mining in Goa. Can you tell us what kind of an opportunity you're looking at and what kind of revenues can you garner from the same?
Yep. Well, certainly I'm very pleased with the work we've been doing, the very strong support of the government of Goa and the support of the central government in recognizing that resumption of iron ore mining in Goa, again, in a way which is appropriate from a community and environmental perspective. It's good for the economy and it's good for the markets. And so we have announced, and we've started the process in October of shipping ores from Goa. Some of the early material is material that had been stockpiled on our site. We're moving that off our site, we're selling it into the markets so we can ready our site for regular mining from our current operations. We are readying ourselves to be mining at a rate of about 5.5 million tons per year. We recognize right now we're in a very weak seaborne iron ore market, but we've been able to sell to the customers the value add of the Goan ores in the international markets. And I think it's important to recognize that the typical ores and product producing Goa would be a low-grade product, which is lower than the normal grades that would be expected and demanded by the Indian steel sector. So the natural market for that material is in China. It's been in the past, and it will likely be that's so in the future. There's relatively low impurity content to it compared to our competitive Australian ores. So we're really pitching this into the Chinese steel customers on the basis of value add lower impurities. And what we would like to see is our ability to ramp up this business, 5.5 million tons per year. Margins will be skinny initially because we're dealing with very low seaborne prices. We still have a 10% export duty on low-grade iron ore, which is going to hinder some ore from getting into the market. And so we want to really work with the governments to recognize that a removal of that 10% export duty will have the effect of putting more ore in the market and also increasing the number of iron ore jobs. Likewise, we have a doubling up of the Goa Permanent Fund with the new district mineral fund put in by the MMDR. So that double up is an added burden, which is difficult for some producers to justify the production in this current weak market. So again, working toward removing some of the excess taxes in an environment where we can put material into a weak market, I think it's good for Goa. It's certainly good from a perspective of increasing export revenues from India, and certainly it's good from a Vedanta perspective.
Tom, just last couple of questions, and I promise we'll not extend our appointment beyond 1:30. If I speak to your counterparts, which is largely from the steel industry, the steel players are crying, they are upset, some of them are scared given that China has excess capacity and they're dumping a lot of steel outside China. What is the experience with the non-ferrous sector? Is dumping from China a problem?
Well, we're seeing the similar problems in the aluminum sector right now, because what's happened is that the Chinese industry have increased their aluminum sector almost at the same pace as they've increased their steel sector. And for a period of time, most of the increased Chinese aluminum was being absorbed by growth in China, just like most of the increased steel in China was being absorbed in China. As China slows down, that increased production is now increasingly getting into the export markets and coming onto India's shores. And so as a major aluminum producer in India, we're producing about 45% of India's aluminum. We are suffering the same issues as the steel sector will be facing in terms of that Chinese aluminum coming into our markets. And so we've been, again, engaging with the government of India, as the other aluminum producers, both the private aluminum producers, but also the state-owned aluminum producers, to recognize it's important to keep the aluminum industry in India healthy, so that it is there in the future to survive increasing requirements for aluminum in India. So again, leveling the playing field by looking at the increasing the import duty for aluminum, recognizing scrap will always have a natural arbitrage advantage and should against primary aluminum, are all part of what the aluminum industry is basically petitioning to the Indian government. And my own perspective is that as India increases its manufacturing, as you increasingly see the made in India, there's an incredible increase in the aluminum requirements in India. So a healthy industry for aluminum today will mean that it is better suited for that future manufacturing sector in India.
Tom, just a quick comment from you. The Supreme Court has issued a notice to Vedanta and the Goa mining case, saying that auctioning mines would cause an 80,000 crore rupee loss, and I understand that Vedanta is among those companies which have got renewal permission. Just a quick comment on this front.
Yeah, we have our renewal permission, and I think it's important to recognize that in the original expiration of the leases in 2007, there was what was called a deemed approval of extension. That is, the government at the time didn't take any action. Even though we as a company made our applications, we paid our stamp duties, and I think subsequent court rulings and subsequent actions by both the government of Goa, supported by the central government, recognized that we made the application for the extension in 2007. We paid the stamp duty, and accordingly we had the leases extended, and that's what's allowing us to begin the production as we speak.
Okay, Tom, we'll let you go on that note. Thanks so much for taking the time out on the sidelines of the conference and speaking with us today at ET Now.
Great. Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.